All right, beautiful. Dr. Richard, how are you?
Morning, Harry. Very well, thank you.
Good morning, everyone listening. Good morning from ShareWise, and my name is Harry McCaskill. Welcome back to another ShareWise webinar. Today, I'm very thankful to have Dr. Richard Treagus with us, the Executive Chairman of BTC Health. I won't take the crown from him. I'll let him introduce the business and a few key topics, but just a quick breakdown of how the webinar will go. Dr. Richard will go through a presentation, mention a few, like I said, key topics that he wants to bring up. And then at the end, there'll be a nice Q&A where you listening, you can drop in any questions you've got. I've already got a few written down from registrants. We can go through and a little bit more of an active one-on-one with Richard. And it should be a good way to sort of get any sort of digging questions out. So Richard, I'll let you take the crown. But again, thanks for your time. And everyone listening, don't forget to drop in those questions.
No problem. Thanks very much for the intro there, Harry, and look forward to providing an overview to our investors.
Beautiful. Now, you can share your screen. I'll let you know if that works. Beautiful.
Here we go. So thank you for the opportunity. Good morning, everybody. And there's an opportunity to provide you with an overview of our company, BTC Health. Essentially, we're a provider of highly specialized medical products to public and private hospitals across Australia and New Zealand. Of course, the usual disclaimer that many of you will be familiar with in respect of company information that we might share with you today, in particular past performance and likewise future performance. For those of you that are looking for more information on our company, I'd certainly invite you to take a look at our website. There's a lot of additional information on our website. It's certainly well worth taking a look at that. So essentially, as BTC Health, we're in the business of importing and distributing highly specialized medical products, innovative products, that is medical equipment, medical devices, consumables, and also specialized pharmaceutical products. We bring them in from around the world, some of the best products in their category, and we make them available to patients in Australia and New Zealand. And it gives us tremendous satisfaction as an Australian company, bringing in these superior, best-in-class products, and really every day making a very meaningful difference to patients, their outcomes, their quality of life, and their outlook. So very, very satisfying as a small Australian company. Our vision, being a small company, is to rapidly scale the business. And we've spent the last couple of years, the post-COVID years, concentrating on diversifying the base of the business, diversifying our customers, a number of suppliers, our product range, and really creating, as I say, that strong foundation. But scaling up the business rapidly such that we can benefit from strong, reliable revenue growth. We have an established infrastructure in the business, which is well established, well set up, and through disciplined control or management of those overheads, really leverage that overhead base, putting us on a sustainable path through to profitability. That's our vision for the business. Now, in terms of the overall opportunity and how our strategy dovetails into that, healthcare is a tremendous growth opportunity. In Australia alone, we spend upwards of $250 billion a year on healthcare, approximately 10% of our GDP, and I think it's appropriate on budget day to be banding those numbers around. It's a very significant commitment in terms of healthcare expenditure. Of course, we have a growing population, we have an aging population for that matter, and so healthcare is not just a defensive sector, but it's a large market which is reliably and continuously growing. Now, BTC Health at this moment in time is really the only dedicated medical device company on the ASX. Of course, there are a number of multinationals, many multinationals supplying products into Australia and New Zealand. There are also many private companies, and indeed there are a few large private equity-backed medical device companies as well. But in terms of pure play specialized medical products listed on the ASX, BTC Health stands alone in that regard. We've spent the last number of years building up a strong backbone to the business, strong infrastructure and capabilities. We have fully integrated warehousing on the East Coast, full supply chain, quality systems. We're ISO 13485 compliant, regulatory systems, and we have a strong and experienced, not only leadership team, but also sales and educators on the ground covering Australia and New Zealand. Many of our team would be, like myself, either medically trained or having worked in a hospital environment. They might have formerly been nursing staff, theatre staff, anaesthetic techs. So they're very familiar with the hospital environment and the drivers and dynamics around specialised medical products. So essentially, we believe that BTC Health is the ideal landing pad for those overseas companies who are contemplating bringing their products to Australia and New Zealand, but for whatever reason don't necessarily have an appetite to set up their own direct offices in Australia. So we're constantly in discussions with multinational companies as to how we can combine our established infrastructure, our local market knowledge, our expertise here on the ground, our affinity and closeness or proximity to customers, and how we can represent their products in this market. Just a word or two on the company structure, if I may. BTC Health, in fact, is a pooled development fund. Now, pooled development fund is a form of venture capital fund, which was incorporated in 1992 or registered under the PDF Act of 1992. The purpose of a pooled development fund is to deploy growth capital into underlying SMEs, high growth Australian SMEs. We have 3 wholly owned individual companies: Specialty Health, which distributes products into the post-operative pain management sector and also into the neurospinal sector. We have Cardio, which specializes in products in the cardiothoracic space, cardiology space, and also in ICU critical care. And then we have a third company, Pharma, which, as its name would suggest, distributes specialized pharmaceutical products. These 3 companies are all operating in similar or slightly different segments of healthcare, but they operate in a coordinated fashion within the group. So that is the structure. The advantages of a pooled development fund is in relation to its tax benefits. So as a pooled development fund, the company pays 15% company tax on any of its underlying gains and earnings. And importantly, our shareholders, they are exempt from tax on capital gains or on any distributions, dividends that they might receive by virtue of holding or disposing of BTC Health shares. So a highly tax efficient or effective vehicle, which rewards the deployment of growth capital into these companies. The market that we serve is the hospital market across both countries. Approximately 1,500 hospitals, about 1,400 hospitals in Australia alone, about half of which would be public, the other half would be private. The public hospitals are funded by state governments, and the private hospitals are predominantly funded by private health insurance and or some out-of-pocket expenditure from patients themselves. But hospital expenditure in Australia exceeds 100 billion and is growing 45% per annum. And this is consistent trajectory or a trend that you would expect in a market that is seeing population growth, aging population, and constant quest and constant striving for better patient outcomes, better health outcomes. We have a good healthcare system in Australia, for that matter, and we expect it to remain so. So in that regard, we think BTC is very well positioned to benefit from that runway of healthcare spending. Our tier one customers, unsurprisingly, would be the private hospital groups. In the private sector, the largest group being Ramsay Healthcare, followed by Healthscope Hospitals, and then, of course, the Catholic Health Hospital Group. And then we have supply agreements with all of the state health procurement offices across all the states. And these would typically be 3 to 5 year supply contracts that we have with those state procurement bodies. So we supply into the private hospitals based on those contracts. So in Australia, of the 1,500 hospitals, we would be servicing about 540, 550 hospitals, active accounts as at today. Now, the first 6 months of financial year 25, we had a very solid performance. I was very pleased with the progress of the business. In September of last year, we were successful in winning a competitive tender for our ECMO equipment, or bedside life-saving equipment, if I can put it that way. It's a 5-year contract we won with Royal Children's, worth approximately $5 million. And that was extremely important for us. That was our first account that we won with this new equipment we were bringing in, or we are bringing in, from Italy. In November of last year, we were successful in securing private sector reimbursement for our infusion pumps on the prescribed list of medical devices, and that secured reimbursement for our pumps at the private hospital level, such that if those hospitals use our pumps, they are automatically reimbursed by private health insurance. So that's given us a really nice runway into the second half of this financial year. Thirdly, very exciting, on the 1st of January, we were successful in concluding an exclusive distribution partnership with a multinational company, Corsum, and Corsum has assigned across to us the distribution rights for their high-quality heart valves. And we concluded that 1st of January. We've now fully integrated that business, and on an annualized business, that will contribute an additional $3.6 million of revenue. So we're very satisfied with that. It slots into our business extremely well. We've brought the sales team across, the inventory across, the customers across. That's transitioned in a very seamless fashion, and we're excited about the growth prospects for that within the combined. And finally, we extended our strategic partnerships with Arna Pharmaceuticals. We have had a good working relationship with Arna Pharma since the middle of 2021, and we agreed with them to extend that partnership to a strategic level, such that we now have exclusive right of first refusal for their specialty products, pharmaceutical products in their pipeline. So a good 6 months for the business on a number of fronts, and we expect that momentum will carry forward into the second half. A snapshot in terms of the financials. Our revenue for the first 6 months on a combined basis across all three companies, just over $5 million, which was up 9% on the prior corresponding period. Our gross profit runs at about 40 to 45% reasonably consistently, delivering $2.3 million of gross profit. I'm pleased to say that we landed on a break-even, or slightly better than a break-even for that matter. Very pleased about that, delivering an EBITDA of $200,000 for the 6 months. We always maintain good cash balance, a good liquidity. We want to make sure that in terms of our balance sheet, we have that flexibility to seize opportunities and to continue to grow the business. So net of debt, $2.7 million of cash, December 31. We've continued to extend our product portfolio. We now over 140 products in our portfolio. And as I say, we're servicing well over 500 active customers. So that diversification in terms of our products and customers and suppliers, for that matter, has continued. So as I mentioned, we anticipate that momentum now to carry forward into the second half of FY25. And we expect we're targeting double-digit growth driven primarily by the integration of our cardio heart valve business. We're also looking for strong underlying growth in our neurospinal segment. And we're very focused on winning additional hospital contracts in respect of our ECMO or life-saving equipment. We feel very optimistic about that, and we're very active in that space. We believe there's opportunity over the next 12 to 18 months that will present. So all of that combined with good overhead cost control and discipline in the business really establishing a very clear pathway for us to sustainable profitability. So in summary, I would put it to you that BTC Health now is the only dedicated specialist medical product company listed on the ASX. Of course, there are other healthcare companies you'll be familiar with, but they are servicing other channels, other segments. We have that laser focus on the hospital segment and specialised products. We are very mindful in terms of being careful we don't get drawn into segments of healthcare that we're not well positioned to exploit. For example, large capital equipment or low value consumables, we stay away from those segments. We expect that momentum to carry forward, as I say. You'll see that evidenced by continued growth in the number of products that we're adding in, the number of suppliers and active customer accounts. And we're looking forward to certainly delivering double-digit revenue growth going into the full financial year. I will just remind investors again, we are a pooled development fund, and I would encourage investors, should you have interest, is please just to make some inquiries around what that means for you and your own tax situation. So we are in a strong position. We will continue to exercise discipline across the business in terms of execution, strengthen our balance sheet, and discipline in terms of overheads and expenditure as we continue on that growth path. So Harry, thanks very much. That's an overview, and of course I'd welcome anybody who has particular or specific questions, certainly to reach out directly to myself or my colleagues. Very happy to engage.
Beautiful, Richard. That was excellent. There's obviously a lot of exciting, points that you've just mentioned, especially the number of new partnerships you've made in the last 18 months. Moving forward, is there a specific target you have regarding the number of partnerships on a yearly basis, and the size of those partnerships?
Yeah, not the number of partnerships per se. For us, what is important is to scale our revenue and to scale it in a way that we can integrate into the business effectively, that we can extract good synergies. So we look at the opportunities, we look at the partners, we look at the type of products that they're offering, and we ask ourselves the question, do those products fit in to our business model? Can we execute effectively against those? We want to be careful we don't get distracted by products that do not fit. And I think that's important, not only in terms of our resource allocation, but also in terms of working capital. We want to make sure that we're using our working capital effectively, and we will continue to build out our cardiology, cardiothoracic division. We feel we've got a good, strong foothold there, and we're looking for growth. Our neurospinal division, likewise, we believe there's good, tangible growth there for us that we can execute effectively on. And then pharmaceuticals. We know the pharmaceutical space extremely well, and we are constantly evaluating opportunities in that space. We believe we can do a good job there.
Just identifying the key parts of the business that are going to best benefit you moving forward is the key.
Absolutely, and I think being disciplined in that respect and not just simply grabbing low quality revenue and tying up a lot of resource and working capital. That's not our business.
Yeah, quality over quantity, they would say. Now, another question I've got, it's on the topic of technology and the advancements in AI and technology. Do you see any key challenges that brings for BTC Health? And also on the flip side, what are the key advantages of that?
No, I think technology brings advantages. It brings opportunity. We're seeing a tremendous infusion of digital technologies into bedside patient monitoring and patient monitoring in the operating theatre, for example. So digital tech is really enhancing many aspects of clinical care. So we think that that is exciting. It means that there's a constant pipeline of new products coming down. So I think that that holds ultimately benefit for patients. And we look forward to seizing those opportunities, particularly in high care settings and the operating theatre. A lot of new tech coming down the pipeline.
Yeah, and would that increase what we just spoke about in terms of the quality of products that you want to be offering?
It's not only the quality, but it's also the where you have innovation, you also have a somewhat of a moat around your product.
Yeah.
So where you bring something unique into the hospital space, you can protect that advantage as opposed to a more generic product. So we're always thinking about, can we put an equipment or device into the hands of healthcare professionals that will make their jobs easier?
Yeah.
And what we call patient results or patient outcomes better. That's the fundamental question we're always asking ourselves. What we don't want to be doing is investing time and effort in the so-called better mousetrap.
Right. That makes a lot of sense. And I guess for the development of technology again, is there anything internally you guys are doing to make sure you're becoming more efficient with the sales process to increase revenues? Internally, what are the challenges you guys are faced with at the moment? And also, what do you find that's working very, very well that is going to actually benefit those shareholders? Because we know, looking at the share price of BTC, it has been sort of trending downwards, and a lot of people have probably got a lot of questions about that. But what is going on internally that you think can provide a little bit of boost?
Yes, I think let me just address that point. Is I think it's fair to say in 2022, coming out of COVID, we unexpectedly lost a very large supplier out of the United States for reasons that I don't necessarily need to go into, but it was unexpected, and that for us forced us into quite a hard reset. We were overly reliant on one large supplier out of the United States.
Right.
And so we hadn't at that moment in time had the opportunity to diversify our business. So for us, that was quite a stern wake-up call. In the last 24 months, we've rapidly diversified the business on many levels. Now we have a number of suppliers. We have a far broader customer base, a far broader product offering. So that diversification has given the business a far stronger foundation, a far more robust foundation moving forward. Now it's a question of growing off that base. And we anticipate some really good growth in the cardiothoracic space. That for us is going to be a key driver moving forward over the next 12, 24 months, undoubtedly.
Yeah.
And let me just to put a little bit of detail around that for some of our investors is that after COVID, 5 years after COVID, now after that pandemic, we're finding a lot of hospitals are looking to renew equipment. Hospital equipment might have a 3 to 5 year lifespan. So here we are, 2025, and these hospitals are renewing their equipment. For us, we see that as a great opportunity. New equipment, new technologies, new capital expenditure gives us an opportunity to really sell deeper into those hospitals. So I think for us, that's going to be the driver of a very much more solid foundation than perhaps we might have had two months ago. And in terms of the share price as such, I would say that the share price, I think, will start to recognize the value as we deliver those results that I'm referring to.
Beautiful, and that's what the shareholders want to see, and that's what they're here for. On On the topic of shareholders, obviously you just mentioned, I saw in the last slide there, that about the top 5% of shareholders own about 69% of shares on issue. Do you see that as being a problem, in the short to medium term, or even the long term, as to why maybe new investors are a little bit worried to get involved, or what is the reasoning behind that?
I think that just reflects where we've come from as a junior company. We're fortunate that we have a very strong top 20 shareholders, for that matter, who are very supportive of the strategy, very supportive of our growth prospects. So that certainly gives us a strong foundation to grow the business, having that strength in the shareholder base. Overall, we have over 1,000 shareholders. I would also add that management owns about 25% of the shares.
Right.
So there's a strong investment from the leadership team in the business, and I think that's always a good thing, is to have that alignment with shareholders.
Definitely.
As we grow, I expect that the register will open up a little more as we continue to grow.
Beautiful. And then off the topic of share price and that matter, you touched on pharmaceuticals. Can you expand a little bit more on the relationship with pharmaceutical, and I guess the benefits you see that having over the next 12 to 18 months?
Yeah, certainly. So Ana Pharmaceuticals is an Indian multinational. They have an FDA-approved manufacturing plant in Sydney. We've been sourcing from them since middle of 2021 two highly specialized products, one for cystic fibrosis and the other for the treatment, or the diagnosis rather, of asthma. So that's been a very good working relationship with Ana Pharmaceuticals for the best part of 4 years now. We realized that their core competency is drug development and manufacturing, whilst our core competency is that of sales, marketing, and distribution. And in recent discussions, it became apparent to both of us that we could play to those strengths. So we decided to extend the partnership. They have given us a license for our 2 existing drugs. They've given us a license into perpetuity on those drugs, which I think is a vote of confidence in BTC Health. And likewise, they have given us right of first refusal to their pipeline of specialty pharmaceuticals, highly specialized pharmaceutical products, which is what we like. We like specialized products because they often serve very discrete patient populations, which you can access relatively easily. They also are prone to less immediate competition, being specialized drugs, and quite often you can secure favorable pricing. So a look at the Ana pipeline was very, very attractive to us, and we've already entered into early stage of evaluation of some of their specialized products. So I'm certainly very hopeful that we get ourselves into a position where we can update investors on progress as we tap into that pipeline of products.
Beautiful. So a lot of exciting things there with Ana, I see.
Yeah, we certainly, as I say, we're certainly confident of carrying that momentum forward now off a strong base through the balance of calendar year 2025, and continuing to keep investors updated on new products, new initiatives, and new partnerships.
Beautiful. Now, just before we wrap it up, Richard, one question I always like to ask whoever it is I'm hosting is, if there was one reason for those that are shareholders, or someone who's looking to potentially become a shareholder of BTC in this instance, why should they remain a shareholder, or why should you potentially look to become a shareholder? And what excites you the most in the next, foreseeable future, 12, 24 months, 5 years, who knows? It sounds like you're in it for the long run, but what excites you the most, and what do you think that the best part of the business is?
Yeah, I think the part of the business that is going to be a standout over the next 12 to 18 months is going to be our cardiothoracic cardiology critical care business. We're very pleased with the recent business we acquired on the 1st of January, the heart valve business. You know, heart valves is a $43 million market in Australia, 5,000 cases a month, I beg your pardon, a year. And, you know, we see that trend is likely to continue. And we're particularly excited about the replenishment of the hospital's equipment, that cycle of replenishment that is going on in the major public hospitals in terms of their critical care equipment. In that respect, we are very well placed. We are very well positioned with the right products at the right time, with the right wraparound team and service. So I think the cardiology business is going to stand out in the critical care over the next 12 to 18 months and will be a key driver. I would certainly invite investors that are looking for a company that has an experienced leadership team, a leadership team that is aligned and invested in the company, has a clear view on the hospital market. I would say that we're very well positioned to benefit from the expected growth in healthcare spending.
Well, Richard, thank you very much for taking time out of that busy schedule of yours. We do appreciate it here at Sharewise. And again, I'm glad we got through a few questions, and anyone who did maybe join late or wants to rewatch it, it is recorded. I'm sure Richard will put it on their socials or whatnot on their website, so you can double check, rewatch it, and it will be on our YouTube channel. But Richard, thank you very much.
Thanks very much, Harry. Thanks for your time.
Too easy. And again, my name's Harry McCaskill, just one of the senior advisors here at Sharewise. So feel free to reach out to Sharewise if you've got any questions about BTC Health as well. We're more than happy to have a chat. But everyone, enjoy the rest of the afternoon and take it easy.